Yeah, thank you so much everyone for joining in. I am Purity Godfrey. I am a Forex trader, a Forex coach. Also, I am a geophysicist by profession, but I resolved to be a Forex trader, by passion. My goal is to connect traders to wealth through quality education and to ensure that you all understand how the market moves, okay? Because you all know that this market is full of uncertainties, full of traps by the big players. So they provide you with a problem and then provide you with a solution, not knowing that that solution is a trap. So that is a very deep thing. Okay, let's say they always say buy a double top, buy a double bottom, buy a trend line bounce, and all of that. Okay, it's a key concept, it works, but oftentimes these are smart money traps that have been set to trap you into induced trades, and then at the end of the day, your trade does not move in your direction or to stop you out before actually moving in your direction. So in today's class, we are going to be looking at smart money market structure. It's a very key thing. But before I proceed, I just want to be sure, because one good thing I like about the Forex market is that everybody, regardless of your country, your state, you have a similar experience. So if I'm dealing with psychology, there is a probability that 80% of traders out there are also dealing with psychology. If you're dealing with losses, if you're dealing with lack of proper knowledge of the market, you will also have the same experience. So what do you need to do different from other retail traders? What do you need to do different from other market participants? So one thing you need to do different is to learn to think differently and act differently from other traders. That action is actually called smart trading. So today we are going to be looking at the smart money market structure, where you can think differently, act differently from retail traders, and align yourself with big players in the market. So before we proceed, I want to ask, we don't have much time. Have you ever taken a trade that looked perfectly, okay, only for price to hit your stop loss, then reverses in your original direction and smash your profit target? You see, they're wondering, who is doing this to me? I want to know. It's not your village people actually, and I'm going to tell you those who are involved in how they do this and how you can actually spot this and avoid them. So if you have actually had this experience, I want you to type 2 in the chat box. Let me see if we all have similar experience. Okay, so just type 2 in the chat box if you've had a situation you have. Okay, thank you so much. All right, Mr. Samji, it seems your experience supersedes every other person's experience. Okay, so there, it's a common experience. The truth is, well, this is not bad luck, it is not witches. Okay, that is how smart money operates. What most traders call manipulation is actually market structure in motion. The invisible footprints of big institutional players who move billions every day. For you and I, we are just moving thousands of dollars, some hundreds of dollars, some tens of dollars. But these smart money, they are actually the ones moving price with their orders. So they don't trade like you and I. They trade based on liquidity. They create liquidity to trap your emotion and to fuel their orders. And that's why 95% of retail traders lose. They keep reacting to price instead of reading the structure behind the price. Like I said previously, I'm going to show you how to finally see what is really happening, how to recognize the true direction of the market, how to spot institutional traps, and how to enter the same zones where smart money is active. This session isn't about magic indicators, secret strategies. In fact, this is an eye training. Okay, it's about reading the market like the pro. All right, understanding where price moves, why price moves there, and learning to trade smart. So if you're tired of guessing, tired of emotional trades, tired of trades, seeing your stop loss before moving your direction, and if you're ready to trade smart, this is your moment. Moving on, as a smart trader, okay, let's start with the foundation. The first thing you need to look out for when you come onto your charts, there are some process that you need to look into before you start your analysis. But because of our time, let's just go straight to market structure. One thing or one mistake that most traders make when it comes to market structure analysis, and number one is wrong structure mapping, wrong structure identification. Now, most traders confuse break of structure and change of character with break of high and break of low, or break of previous high, break of previous low. These are two different concepts and their application differs. Price behavior analysis around these zones differs as well. But for the purpose of this webinar, I'll be focusing more on correct market structure. However, I'm also going to show you some correct structure mappings. Like I said previously, before we head to the chart, market structure is the language of price. It tells you the story of what's happening behind the candles, who is in control, is it the buyers, is it the sellers, And it also helps to identify when that power shifts. Now, like I said, the mistake most traders do is because they mark wrong zones as zones of market shift. And then by so doing, you have already altered the structure of the market. So you are not trading in the correct direction of the market. All right. So every trend, every reversal, and every liquidity hunt starts with a structural clue. There will always be a clue. That is why I said your two eyes are your best indicators, because before your indicators will give you any signal, your eyes should be able to spot that based on your market structure. So two of the most important clues you ever learn are break of structures and change of character. So before we proceed, please don't draw on my screen. Okay, so before we proceed, the first element of structure mapping in smart money concept are your pullback. Pullbacks are very vital elements in your structure mapping. If you do not know how to identify a valid pullback, you're going to be making a mistake. I want us to be on the same page. Okay, there are a lot of videos out there about smart money concept. There are a lot of videos out there about pullbacks, but then this concept that I teach, I've used it for years, and it's been proven by myself and by my community also. So it's very important for you to know that whatever concept you're practicing, if it's working for you, that's fine. But if you implement the strategy that I'm about to teach today, and you realize a shift in your market understanding, or a shift in your market structure, a shift in your profitability, then it's something that you should integrate in your trading approach. For the concept that I teach, it defines every detail of the market for you. So when this is done, you're likely not going to miss out on any trading opportunity. However, it is just in your discretion to now decide which trade am I actually going to take, right? So as a smart trader, you're going to focus on high probability trades. So right here, as you can see on the screen, first element of your structure mapping is your pullback, like I highlighted. So right here, we have a valid pullback. How do you identify a valid pullback? In a bullish trend, you identify a candlestick that took out the low of the previous candle and then breaks the pullback high. That is your valid pullback. All right, so let's just quickly take this as an example. As you can see, let's say this is a bullish move. Okay, how do you identify a valid pullback? Price broke this high. Okay, let's start from here. Price broke this high. How do I now start identifying valid pullbacks after this the break of this high? So this is the candle that broke this high, right? This momentum candle broke this high. So what I want to see is, in this bullish line, I want to see a candle that took out the low of the previous candle. That's how to identify a valid pullback. So I want to see a candle that took out the low of this bullish candle right here. It's not that technical. We'll practice, you understand better. So this candle low is still protected. Moving on, we have the second candle, which is this. You can see that this candle's low is not protected. This third candle pushed beyond it. So the next thing we want to see is, we want to ensure that price breaks above this pullback high right here. Okay, so once price breaks it, then this is my valid pullback. Now, this is what I was talking about. A lot of traders mark out this pullback move as a break of structure. This is not a valid break of structure. If you mark this as a break of structure, you're going to make wrong trading decisions, and you're likely going to fall for smart money trap. This is a break of a previous high. Okay, don't worry, as we proceed, I'm going to show you how to identify a valid break of structure to avoid smart money trap. So this is a valid pullback in a bullish trend. Same thing is applicable in a bearish trend. This is a bearish move. Let's say price breaks below this low. Okay, so once price breaks below this low, I want to see this candle high is still protected. The next candle high is not protected. So we have a valid pullback right here. So when price breaks here, so we have this is a valid pullback. So price breaks this low. So this is our pullback move. Now, as a retail trader, I'm sure you are not going to be able to identify this spot on the chart as a pullback. But as a smart trader, you're able to identify that. And trust me, this actually gave us a valid entry point right here, if I'm to go by that. Okay, so if you don't understand how to map out your structures using SMC concept, you're going to miss out on a lot of details, a lot of juicy entry points, and to be likely that you're unable to avoid smart money traps. So moving on, we have established how to identify bullish and bearish pullback. The next element of SMC structure mapping is your inducement. You all know that, like I said previously, smart money concept based on smart money, and we want to trade based on how they trade. So smart money do not come to look out for double tops, double bottoms. They are looking for the liquidity. Liquidity is basically your money, where you set your stop loss orders. So in this case, smart money are looking at for liquidity. Now, assuming we are in a bullish trend, like I said, they set the trap and then you fall for the trap. They have told you to buy a double bottom. But are you aware that there are some price behavior you need to look out for before you buy a double bottoms? There are some price behavior you need to look out for before you sell at double tops. That is why you need to think smart. But if you're not a smart trader, trust me, you're not going to pay attention to all those behavior. All you need to do is wait for a confirmation at double bottom and buy. But in smart trading style, there are principles we follow before you buy or sell, and that will help you filter the signals in the market. Because it's not all about signals, it's all about confirmation of your signals. You can get the price signal. In fact, even the wrong POIs, the wrong support the resistance level, there will always be a signal. So what differentiates you from other traders is for you to be patient enough to wait for a confirmation of your signal, because the confirmation of your signal actually validates that zone and validates your entry. So these are some things that you need to integrate in your trading approach. Profitability in this industry involves a lot of factors. I cannot even name them enough. Psychology, risk management. Last week we talked about risk management. We talked about market structure analysis. We talked about price behavior analysis. Price behavior analysis is key. And trust me, a lot of traders out there, a lot of teachers out there do not pay attention to price behavior analysis. If I'm asking you, okay, you want to buy at this particular zone, this is a double bottom, right? Why do you want to buy here? What kind of behavior are you going to see around this zone to determine that this buy is not going to be valid here? So once you have already understood these principles, you will see that it will be nearly impossible for you to blow up your account. It will be nearly impossible for you to have losing streak. But having a losing streak is not wrong. You can actually have a losing streak and still stay profitable once you know how to implement proper risk management. That is deep, okay, and we cannot elaborate that in this class. So moving on, after identifying our pullback, the next element of structural mapping we're going to look at for is inducement. Okay, now inducement is your recent pullback. So right here you can see that we have a pullback here. So we have a pullback here, we have a pullback here, all right? And then if we look again, you can see that we have a pullback right here also. We have a pullback. So, and also again, if you look clearly, you can see that we also have another pullback here. Based on all of this, our recent pullback is our inducement. So right here, we can say this is our recent pullback right here. So at this point, this is the first point. This is the first double bottom where buyers are likely to buy. True or false? If it's true, just type 5 in the chat box. This is the first double bottom that traders are likely to buy. If it's true, type 5 in the chat box. I want to see those who are following. All right, thank you. Okay. All right, thank you. So at this point, this is our inducement zone right there. Now, having identified our inducement zone, there is another element of structure mapping that you need to look out for, all right? Who can tell me in the chat box? Just quick. We don't have so much time, okay? Liquidity, nice. POI, order flow, liquidity, nice. So guys, if you're unable to answer this question, you need to do justice to your trading approach, all right? Liquidity, good. So everybody have answered correctly. So first things first, after identifying your inducement zone is your liquidity structure. It's your first point of liquidity, the first point where traders are likely to set their positions. And you know, as a trader, they say set your stop loss below the previous low. So this is the previous low right here where you're likely to set your stop loss. So in that case, traders are likely to be engineered to buy here. As you can see, there's a candlestick indicating bullish sentiment. Okay, so at that point, some traders will be looking at to buy from here. But then, as a smart trader, there are price behaviors I will look out for before we buy from here. So once you are done identifying your liquidity structure, the next thing you need to identify is your POI. Now, as a smart trader, we don't just identify any POI. We pay attention to smart money POI. Why smart money POI? Because we don't want to trade against them. We want to trade with them. So if you want to trade with them, you need to identify where they are placing their orders and go right there, place your orders and trade alongside with them. While other retail traders are trading south, the smart money are trading north, and we are trading alongside with them. So you would realize that most times smart money trade against retail traders. So we don't want to be against them. We want to be on their side. So one of the smart money POIs that you are likely to look out for, the first POI you need to look out for based on this trading approach is your order flow. Okay. So your order flow is your pullback high. All right. If there is impulse correction, so that correction is your order flow. So right here, you can see that we have an impulsive move. We have a correction right here. So from the high to the low here is your order flow. Then we extend it into the future. All right. So you can see that price is sitting at a order flow right here. But then your order flow should have an imbalance. There are 4 major POIs that we look at for based on smart money concept. We have the order flow, we have order block, single candle order block, we have imbalance. So I may not be able to divulge all of these because of time, but we are going to pay attention to the order flow first. Okay. So moving on, right? So once price mitigates your order flow, then you look out for entry. But remember, we are talking about market structure. When you're marking your POI, you need to pay attention to your market structure to ensure that your POI does not exceed the current bullish trend. All right, let's say, for example, this zone here is our change of character zone, and then we're identifying our POI. As you can see, we also have another POI right here. This is a valid pullback. Okay, so this is our order flow. Now within this order flow, you can see minor order flows. You can see an order block right here. So why I say always pay attention to the order flow first is because price can mitigate this order flow. All right. So price may choose to mitigate this order flow without mitigating the order block right here. And if price does not mitigate this zone, that means if price moves from the order flow, you're going to lose out on the trade setup. So always pay attention to your decisional POIs. Okay, decisional POIs are POIs where you are looking at to buy or sell. Okay, first, second, third decisional POI before your chalk zone. The extreme POI is the POI just before your chalk zone. Like this one is your extreme POI. So that's how far I can go for that. Now, moving on, when you identify your POI, it should be within your chalk zone. So what this simply means is any POI below this chalk zone is not a valid bullish POI. All right, is not a valid bullish POI. Why? Because it is no longer within our bullish structure. So if price moves beyond your chalk zone, what is the significance of that price behavior? It signals reversal. So we don't want to keep buying when the market is bearish. As you can see, we have this price is pushing lower. But at this point, I can tell you for free that this market has not reversed, okay? Especially if you're integrating this with your higher time frame analysis. Top-down analysis is top-notch and is key. Now, moving on, once price moves beyond your inducement zone, we have to identify this zone. Okay, because of our time, I'm not going to be asking questions. This zone becomes our major high, and it is also called a break of structure. So like when I started, right, I said your break of structure and your change of character zones are key zones that you need to know how to identify on the chart. Basically, a break of structure is a confirmation. All right, it tells you that the trend is continuing, but a change of character is a whisper before the storm. It's the first sign that controls may be shifting from buyers to sellers or from sellers to buyers. So that is why I say it's not just about marking structure, it's about marking out the zones, understanding the significance of that zone. You can see that the significance of a break of structure zone is different from the significance of a change of character zone. So price behavior identification is different for these zones. Price behavior analysis is different from these zones. Price behavior interpretation of your break of structure zone and change of character is also different. So if you don't understand this, you will keep doing the wrong thing. So like I said previously, the change of character zone is the first sign. Once price closes below it, you have already recorded a reversal that is upcoming, even before the market actually creates another lower low for reversal. Okay, that's why I say that your two eyes are your best indicators, because you will spot price behaviors, price signals, even before the indicators. And even if the indicator provides you with an invalid signal, you should be able to filter that signal. Okay, so understanding break of structure and change of character is like learning to read price action without guessing. When you can identify structure, you no longer predict price direction, you follow it with confidence. That is why smart traders are confident in their trade, just like myself. Okay, so in a few minutes, I will show you exactly how to identify true break of structure and change of character, how to filter fake breaks, and how to use them to confirm institutional activity. So right here on the chart, what I'm about to show you works everywhere on the chart. It works on every financial instrument. Why? Because price is fractal. And the most important thing here is for you to understand this concept, okay? Because it works across various financial assets, be it crypto, stocks, indices, even the forex market, and so on. They all have one thing in common, right? All these markets that I have talked about have one thing in common. And one thing they have in common is liquidity. And in simple terms, liquidity means money. So if you're buying crypto, if you're selling crypto, if you're buying stock, if you're buying indices, it involves money. And like I said, Forex is the only business that you trade money for money. So in that case, it means this concept is applicable in all the financial assets that you have. Moving on, as we have identified, right here we have once price moves beyond your inducement zone, this concept, whether price has closed below or not, once price has moved beyond the inducement zone, the major high, the highest point actually that created the break of your inducement is your break of structure zone. Okay, then if price closes above this break of structure zone, for example, price closed from here, okay, closes above it with a candle body close, the lowest point, which is this, that created this break of structure right here, is your change of character. Okay, so this will be seen as your change of character right there. So that's how to interpret this. Let's talk about one of the most misunderstood and painful realities in trading: liquidity traps. Before I get to liquidity trap, guys, you can see that while this market was selling from here, okay, I never thought of it that this market has reversed. But a lot of retail traders would think the market has reversed, and they are probably going to want to sell from here all the way down. But based on SMC, assuming this price moved all the way to this zone, I realize that this price is no longer bearish. Now, most traders make the mistake that they start thinking that this market has reversed from here, and then they start looking for a selling opportunity. This zone that I have highlighted is not doing justice to what I want to explain, but let me see, okay, so that you gain more clarity. Okay, so right here we have an inducement. Like I always say, once you understand the principle, you'll be able to understand it everywhere. So right here we have an inducement, and then we have a valid break of structure right here. We have a sweep here. This is a liquidity sweep. This price behavior is very deep. But let's see if time will allow us cover that. Now moving on here, this is a break of structure. That's where we have a valid close above. That is why I'm marking that zone as my valid break of structure. So after this break of structure, since we have a valid break of structure, this validates this our major low, this break of structure zone. I hope you can see my screen. So this validates this our major low, and since we have a valid break above our break of structure zone, that's break above our major high, then the low responsible for this break above becomes our major low. Okay, and our change of character zone. So this becomes our change of character zone right here. Okay, so what this simply means is, assuming price is pushing lower, just like you all know, and then we have, let's say for example, we have a break of this low, I would never think of it that this market has reversed, and then we have another lower low here. I would never also think that this market has reversed. But some retail traders will think that this market have reversed, and then they will start looking out for selling opportunity probably around this zone. So in this case, you can see a lot of traders will want to sell from here, and good thing is that oftentimes market will give you very strong sell signal for you to sell. But what makes the difference from a smart trader and other retail trader is that you need to confirm that sell signal that the market has given to you to validate that there is a selling interest around this zone. So if you don't see those confirmation signals, there is no need involving yourself in that trade. So now at this point, retail traders will be looking at to sell, but because our market structure, that is why SMC market structure is the key and game changer for me. Since this market structure change of character is still intact, it means that the market is still bullish. Okay, so this is just a pullback, and when there is a deeper pullback, just like we have here, for example, all right, this is a deeper pullback. Are you aware that SMC market structure will break down this concept for you and still give you an entry? Because of our time, I don't know if I should go into that. Let me see what time I have left. Okay, no time. Okay, if you want to learn more, you can join the community, okay, using the link. You can see the link in the chat box. You can check that out. Like I was saying about our market structure, you need to pay attention to these price behaviors. Now, I've talked about liquidity. Liquidity is a very important concept that you need to pay attention to. So the market needs liquidity to move. You know, when we started, I asked the question if some of you have experienced the fact that you got in a trade and the trade stops you out before moving in your direction. Now, the market did that because the big players need liquidity. That means they need your orders. The big players, they want to buy, they need to sell first before they buy. So they induce you to sell. And then when you sell the position they are willing to buy. I don't know if you understand that information because it's deep actually. So when you sell to them, you know, when you want to sell something, it means that there's someone who is willing to buy. So when you sell to them, they buy your orders. So for them to buy your orders, they need to make you feel like selling. Okay, feel like selling your product. So they induce you with respect to market structure, respect to engineer liquidity. And guess what? You're excited and you manipulatively sell your orders to them. And then at that point in time, the stop loss has been hunted. That is why it is called an engineer liquidity. You're engineered, you're induced to buy or sell earlier before the actual move. So when you buy or sell before the actual move, the stop loss is hunted, and then you see price moving in your direction. Guess what? That is actually when the big players are moving. So how do you understand when the big players are about to move? We need to look at zones where they create, you know, attraction for retail traders, support zones, resistance zone, equal high, double bottom, and all of that. So they first of all push price into that zone and then stop you out. So that is called a liquidity sweep or stop hunt. And it's one of the biggest reasons why many traders get stopped out before the real move happens. So once you learn how to identify liquidity pools, you stop chasing breakouts. You start waiting for liquidity sweep and reversal that the institutions use to position themselves. And guess what? We align ourselves around the smart money POIs before the market moves. So in this next phase, I will show you exactly how to spot liquidity traps, how to confirm when a sweep has occurred, and how to turn those painful stop outs into high probability setups. If you already, just type 2 in the chat box. Thank you. Thank you for that. Okay, thank you. So now moving on. Now after price mitigates your inducement, let's say we identify a valid POI right here, for example. Identify the valid POI. Next thing you need to look out for is price behavior analysis. Price behavior analysis is very important. A lot of people talk about fundamental analysis, technical analysis, but price behavior analysis is the key because it tells you fundamental analysis, you know, everybody's speculating with the US interest rates go up or down, what is the effect on the market? We are speculating, we are not sure. Technical analysis is the same thing. You're speculating on what price you do, but price behavior analysis is telling you what is happening in the market at the moment. The current structure might be bullish, but price behavior analysis is telling you that we are in for a sell. Sell now. While the market structure is looking bullish, price behavior is telling you sell now. And do you know that even while you're positioning for a sell entry, you have marked out your zone, you're positioning for a sell entry, price behavior analysis at that instant will tell you to buy now just because of one single price behavior analysis. And it's very, very important for you to understand all of these concepts. Price behavior analysis at your break of structure zone, at your inducement zone right here, and at your change of character, assuming there's a close above, which is this zone, is different. Like I said, liquidity are zones where the big players want to stop you out of the trade and all of that. This is a liquidity pool. This is also a liquidity pool. This is also a liquidity pool because traders want to buy, sell, from here because this is, a double top. So if you are not conversant with market structure, you may not be able to understand how to actually position yourself for a selling opportunity. Now, as a smart trader, obviously, this zone is a double top, right? It indicates a selling opportunity. But then, based on this price behavior, our structure is bullish. So why will I be waiting for a selling opportunity here? It means I am not interested for any sell signal here. However, there are price behavior that will give you a signal to sell from here. And one of those price behavior is what we call sweep. Let me see if I can see any of that. So if there is a sweep of your inducement zone, it indicates price want to keep pushing higher. Price may likely not mitigate your POI. If there is a sweep of your break of structure zone, like I said when I started about break of structure indicates what? The price wants to continue in the direction of the trend. A close above here indicates price wants to continue in the direction of the trend. Then a close below your chalk zone indicates reversal. Okay, but then if there is a sweep here, it indicates that price may likely not push higher immediately. Okay, it indicates the level of strength of the buyers. So if there is a sweep of this zone, a sweep, a rejection, it indicates that the trend is actually bullish, but the buyers are exhausted. They do not have strength to push price higher. So what are they going to do? What would the buyers do to push this price higher? All they need is liquidity. Liquidity fuels the market. So what the market is going to do is it's going to look for the next point of liquidity where the buyers are likely to position for a buy trade. Induce them to buy early so that they can stop them out, meaning they have sold this position, right? Stop them out. And once they are stopped out, the big players now have enough liquidity. Their orders could be activated at their POI, for example, and then price will move in their direction. So price behavior analysis is very important. Now, regardless of the fact that this market is bullish, there's a price behavior that we'll see here, and then we'll start selling. So one of those price behavior is a sweep. Also, if price sweeps your change of character zone, it indicates that price is likely not going to push lower. It means that the sellers actually try to push price higher, but the buying interest around this zone actually pushed price above this zone, indicating that there is no strong selling interest to drive price lower. So since this is a change of character zone, and change of character indicates reversal, right? So if there's a close below, it indicates there is a reversal. Now, if there is no close below, if there is a sweep, it means that there is no reversal, all right? It means continuation of the bullish trend. But some persons, when they see price move beyond the chalk zone, they start selling. In fact, if you're not a smart trader, you're not going to even look at this as a chalk zone because from here, you've already thought of it that the market has reversed. But a smart trader would know that he or she needs to wait for price behavior around this zone before they can buy from that zone. Okay, so that's one way to look at price behavior. There are several price behaviors you need to look out for. We have institutional funded candles, we have volume, we have momentum candles. And one thing you need to understand is that not all momentum candles signal strength in the market. That one is another deep concept. So many times, momentum candles on the chart, all right, are a signal of pumping in price by the big players. Like I always say, your order and my order cannot move this market. It's not possible. So the big players have sufficient money to drive this price to any direction they want. And you will always see their footprints on the chart. So sometimes we don't want to mistake their footprints as strength of the market. Most times their footprint signals liquidity hunt. So how do you now identify that this move is a liquidity sweep and this move signals strength in the market? Is one thing you need to understand. It's only market structure that will define that for you. Why did I say it's only market structure that will define that for you? Now, let's say, for example, you identify this zone as an inducement zone. So it means that if you start seeing strong momentum candles pushing lower, right, it signals that price is coming for the liquidity here. It does not signal strength because the market is bullish. But guess what? Once retail traders start seeing strong momentum candles, they tell you the sellers are stepping in. Sellers are stepping in. True or false? Okay. They tell you sellers are stepping in. I want to sell because they are strong momentum candles. Oftentimes, strong momentum candles are pumping price at big players to hunt liquidity. So you need to be able to differentiate between momentum and market traps. Moving on, I've shown you how to identify your order block. Okay, I've shown you liquidity concepts. So this sweep of these zones, Okay, let's say price takes out liquidity and then price still moves in your direction. That is just liquidity, hunting your stop loss orders before price moves in your direction. So when there is a liquidity sweep, you need to pay attention to price behavior. And the way you enter a trade based on liquidity sweep also helps you to identify your entry point. Now that you've understood structures and liquidity, if you have actually understood, because I like to be sure that everybody's carried along, if you have understood, just let me know. Once you're able to identify your liquidity structures, your inducement zone, because your inducement is your first point of liquidity. So you should be able to identify that. And you should be able to identify your POIs. Your POIs should have clear imbalance. And that imbalance is stating that the big players were there. And that is why we are looking out for those zones to buy or sell. So if the big players are not there, we are not interested in the buy. You can go with your buy. And that is why you need to be patient in the market to wait for your strategy to validate itself on the chart. If your strategy does not validate in the chart, run. All right. Make sure you build that discipline, but that is what is going to help you stay consistent in the long run. Sorry, guys, I'm too fast. So once you master this smart money concept, guys, you start trading from the zones where institutions, big players, bankers actually enter, not where the retail traders get trapped. Okay, so now how do you build high probability setups using market structure? Now let's head quickly to the chart. Let me show you practical example. Okay, how to look at that. So I always teach that once you come to your chart, before you carry any structure, you need to look at your chart. Now if you look at this chart, you would think that this market is bullish, right? But for a smart trader, you need to shrink your chart to the barest minimum, to almost where you can hardly see the price. Now at this point, what can you see? You can see that currently it seems like the market is bearish, okay, and then we are having a pullback. But then we cannot really say what exactly is happening. All I can say now is that the market is bearish and we are having a pullback. But how can we ascertain, has this pullback changed character? Are we now bullish? Is this a pullback or the market has actually changed direction to a bullish trend? So we need to ascertain this based on market structure. How do we want to do that? So I want to use this. We have a bullish move here and then we have a bearish right here. So let me take it back so that we can start from, I want us to look at a bullish and bearish scenario. Right here, we don't have much structure. I thought of using this label, we don't have much structure. So if we just analyze this, let's say, for example, this is our inducement, okay? Inducement has been taken, sorry, right? Then we have our break of structure here. Okay, so these are break of structure, and then since we have a break of structure, this high now becomes our change of character. So I will not have so much information to carry out the analysis that I want to carry out. That will integrate all the concepts that I have mentioned right here. Okay, so for the purpose of our time and for us to also gain more clarity, let me just quickly see if I can break down this bullish and then the bearish zone as well. If you are ready, just type 7 in the chat box. So like I have always told you, you've learned structure, that is break of structure and change of character. You've learned liquidity, how to identify the traps. You've learned other blocks where institutions leave their footprints and the other flow. Okay. Now, I want us, like I said, to combine these to get high probability trade setup, because trading is not about guessing, it's about building your confidence, stacking confluences, and the more reasons you have to take a trade based on structure, based on liquidity, based on smart money PO, and based on confirmation, okay, the higher your probability of success. So first thing first is for us to identify our structure on a higher time frame. But because of our time, we cannot go to a higher time frame. So moving on, now let's take a look at this. Okay, so as you can see, the market was bearish, then we have a bullish structure. Like I said, I want us to look at the bullish first. So one thing you want to do is you don't want to be analyzing your chart blindly. So we want to see how this bearish structure switched bullish. Like I said, I would have started the other way, but you can see that we didn't even have a change of character at the recent price. So for us to get more value from this, all right? So now moving on, you can see at what point did we have a change of character? So first things first, you can see this is the lowest point, right? So right here, price broke this low. And as you can see, price took out inducement from this low, but did not do what? Create a change of character, did not close below. So if price are closed below here, this would be our change of character, right? Because this is inducement taken out. So this is inducement taken out right here. Okay, but in this case, price did not close below, price pushed higher. So we need to identify where we have a valid close below our break of structure zone to be able to ascertain our change of character and to be sure that this market is reversing. Remember, if we're trading this in real time, we don't want to miss out on any details. Okay, so moving on, we have another break of this low right here, and you can see that this low break did not take out inducement. So it's not a break of structure, it's a break of previous low. As you can see, this low did not take out any inducement. So it's a break of previous low, not break of structure. Now moving on again, we can see another break of another low right here. So you can see that this low took out inducement from here. You can see that we have a value pullback. So this is our inducement zone right here, and price took out inducement. So after price took out inducement, we now have a valid break of structure. This is where our break of structure is confirmed because liquidity has been taken. So this is a valid break of structure. Since we have a close below our break of structure, then this high is now our change of character right here. So what this simply means is that everything happening within this change of character high and this low, because this is the lowest point at this point in time, this low here is our minor structure, internal structure. All this pullback, even if price pushes up onto this zone, it does not mean the market has reversed until we have a close above. So what this simply means, we continue with our structure. So assuming you want to analyze this bearish structure, sorry, let me label this. Sorry guys, I'm rounding up. So at this point, you can see we still do not have a change of character, but because of our time, I will not be able to break down how you would have also maximized profit trading these minor structures. So assuming we have an inducement right here, this is a pullback, okay, that broke this low. All right, so we have a pullback. Recent pullback is your inducement. Take note. So right here, after inducement has been taken, we identify our POIs. So right here we'll have a POI, which is an order flow. All right, this is an order flow, is a pullback. Okay, we extend it into the future. Now while we are waiting for price around this zone, this POI has already been mitigated. So within the bearish POI, I mean, we have an order block right there, as you can see. Okay, so if we extend it into the future, it has imbalance. So this is the imbalance I'm talking about. We don't want a mitigated POI. However, there are conditions to trade POIs that have been mitigated. Okay, so that is why I talked about price behavior analysis. They help you align yourself with changing market conditions. So right here, you can see that this POI failed. Even with the way price got to that POI, God forbid that you start selling around this zone. So right here, okay, you can see that we have a bearish POI right here. So in this case, this is our order flow, right? I said it's a pullback. So in this case, price reacted from this bearish order flow, and there are price behaviors that you see right here before you make your trading decisions. So in this case right here, remember the market was bearish, and at this point price reacted from this zone. We are expecting price to push lower to mitigate this zone. So let me just break this down. Let me just give you the tip. Now when price mitigates your POI, okay, you look for a minor change of character before you sell. So price is still at our POI. Price is pushed higher into our order block. Look at the order block right there. Can you see the order block? Look at the order block right there. Price pushed into that zone. So based on this, you can sell using the single candle order block concept or your minor chalk right from here. And then remember, in a bearish trend, or your risk to reward, minimum risk to reward is 1:2. So if you're getting in from this zone, your risk to reward should be 1:2. And the first recent last, a day trader, I don't know if you're a day trader, if you're a swing trader, if you're a scalper, depending on you. Okay, so right here is going to be our first target for this trade. But then what happened if we are actually trading? Then we are also going to see some price behavior signaling reversal. Now after price pushed higher based on our minor structure, we would have also seen this signal. Okay, so I may not be able to divulge all, guys, and I hope you all are understanding what I'm doing. Okay, well, if you do not, you know what to do. Right now, moving on, we have a change of character still on our market structure. We have our change of character right there. So let's say you backed some profit there, and then based on price behavior, you knew when to exit. Okay, because price started creating more bullish sentiment. Now in this case, we have a change of character. After a change of character, what do? You look out for your inducement. Okay, now let's say after this change of character, price had not printed all of this. Sorry, I don't want to cut this because of our time. All right, now let's say after the change of character, this is your inducement. After that, what happened? We are waiting for price to come take out this inducement. Now after identifying this inducement, this is our POI. Okay, for example, this is our POI. Remember, we now have a change of character. This has signaled that the market has reversed. Now in this case, after inducement, we are waiting for price to take out inducement. Price did not take out inducement. Okay, we're patiently waiting. That is why in the market, patience is also a strategy. You need to be very patient. You know, the market is going to take your orders and give to those who are patient. Now, price broke this high, creating a new high. So this is not a break of structure. This is a break of previous high, because as you can see, this pullback did not take out any inducement. So since we have a break of next high, we now have our new inducement point here. These are major inducements, okay, and this is minor. Why is it major? Because we have, okay, and this, right? But you can see that price started creating minor pullback from here. All right, as you can see. Okay, so in this case, this is our minor right there. I hope that is clear. All right, so we have, okay, that one right there is an inside bar. Okay, so we have this one. So inside bars are not valid POIs. Okay, when you're marking, in fact, avoid inside bars when you're marking your structure. They are smart money traps. A lot of people may trade it as their strategy, but for me, it doesn't work for me, and I've proven it over the years. So whatever I'm teaching you right here, something I've backtested and I'm using it. Okay, if you follow me very well, you realize that this concept is working, and we are actually trading the smart money way. Okay, now moving on, price created a new high. While we are still waiting for inducement to be taken, you need to be patient. However, actually, there are ways you can trade without waiting for price to take an inducement. You can actually get an entry without price taking an inducement. That's an advanced thing. Okay, so you need to pay attention to market condition, price behavior. Because I say sell at other block does not mean that price will respecting other block every time. In fact, the market, it changes to the point that this week there will be different behavior. Price might just be moving from other flows, and then next week or next month, price start moving from other blocks, and then next month, price start moving without mitigating other blocks. It's just sweeping. So what will save in the market is proper knowledge of this concept. If you don't have the proper knowledge, you would say, oh, my strategy is not working. You go on YouTube and start looking for another strategy that will work. It doesn't work that way. The market is dynamic and the conditions changes. All you need to do is to position yourself with the changing market condition based on your understanding of the market and trade effectively. So moving on here, price took out, we have more inducements. We keep waiting. Now price took out inducement from here. So at this point, we have inducement was taken. Sorry guys, I think this is the only example I'm going to take because our time is far spent. It's already time. So this is inducement taken. So once price takes our inducement, next thing is to identify your POI. So we have a POI here. Remember I said this is your pullback, low and high. So this is a POI, and you can see this POI has been mitigated. It's likely that price may not come back here. If price is coming back here, then we look at it as a demand zone, and you need to be able to identify your demand zones to be able to utilize this POI again. All right, so moving on, we have our other block here. We clear imbalance. So, and also we have another flow right here, but you can see that this other flow here is before our inducement zone, and we don't want to get trapped in it. It's not below our inducement zone. Your bullish POI should be below your inducement zone, not above your inducement zone. Okay, because after price grab liquidity from this zone, all right, the big players need to position their trade around this zone. So right here again, this is a nugget. I'm not supposed to share it for free, but I'm just going to share it for free. Okay, so after this, I think I'll be summarizing. So once price takes out liquidity, let's say inducement from here. Okay, remember I said liquidity fuels the market. So once price takes out liquidity from here and fails to push high, because after inducement liquidity has been taken, since it is a fuel, it should push this price higher. Okay, so once price takes out liquidity from any zone and fails to push higher, and then you see the price pushing lower, know that the liquidity from here is not sufficient for it to push higher. So price is struggling. Can you see price is struggling to push higher? That means the liquidity here is not sufficient. So all you need to do as a smart trader is to position for the next liquidity point where buyers are likely to buy. Around this zone, we need to highlight this. This is now our next point of liquidity. Why? This is another double bottom. Okay, so at this point, we're going to position around this zone. And not just position around this zone, we identify a POI because there is always a POI. That is why they are called smart money POIs. Order flow, order block, single candle, order block, imbalance. They are called smart money POI for a reason. So look for smart money POI where after the liquidity grab, remember I said the smart money sell. They sell before they buy. So if they are selling, to what extent are they going to take their profit before they buy? This is the smart money POI where they are going to exit their sell position and activate their buy orders. And that is where we are looking at to buy. Moving on, price takes out liquidity, like I was saying, and then fails to push higher but pushes lower. All you need to do is identify the next point of liquidity. Okay, and a POI where you're likely to buy from. Sometimes price may not mitigate this POI. Price is going to create a price behavior around this zone. Okay, signaling that price is not going to mitigate your POI. In that case, you need to pay attention to price behavior around that zone. So once inducement has taken price mitigate, remember I said once price pushes beyond your inducement zone, our major high is now our break of structure, which is this. Don't worry guys, I'm summarizing here, honestly. All right, so this is now a break of structure. So, and then here we have our change of character because price broke above and closed above our break of structure zone. Okay, so this is now our change of character. Now, as you can see, this is what I was talking about. Can you see that we have a sweep of the change of character zone? It indicates that price is going to push higher. This is what I'm talking about when I talk about signals and confirmation. This is a signal, but there is no confirmation of this signal. As a smart trader, we identify signal, but we don't just jump into the trade. We pay attention to signal confirmation that will validate the signal around this zone, indicating either a buying interest or a selling interest. And that is an advanced thing. Okay, so once you learn this, you will never look at the market the same way again. You all have finally seen why price moves, not just how it moves, and how you can position yourself to trade alongside the big players. So guys, thank you so much. I hope you got value from today's class. I'll be wrapping it up here. and I'll be taking your questions now.
Thank you so much, Rity, for that insightful class. That is a nice one. So, okay, so this is 9:08 already, so we'll be having few minutes for questions. If you have like what questions to ask now, you can just kindly drop your questions on the comment section so we can attend to them quickly, or so we can rest and have a good night rest. Yeah, M Lights, if I'm correct. Yes, you can drop your question. So we'll be taking like three questions. Three questions. So the first three persons that will drop their questions are the ones we attend to for tonight. Okay, ma. So there are questions you can attend to the first three questions, ma. Thank you, ma.
Thank you. Is SMC suitable for all time frames? Yes, SMC is suitable for all time frames. But then price differs at every time frame. The concept works on all time frames. Are you following? It works on all currency pairs, like I said, it works on stocks and all of that. Confirmation time frame from 15-minute structure mapping. Okay, that's depending on your trading style. Okay, you need to ascertain if you're a day trader, swing trader, and all of that. But your confirmation time frame, I don't know what you mean by confirmation time frame, because as a trader, you need to have just two time frames, your higher time frame and your lower time frame. So if you have series of time frame, I don't know which of the time frame you want to have as your confirmation. Is it for your, you just need to define your trading style, okay? And then your lower time frame should be your confirmation time frame. So if your 15 minutes is your lower time frame, then that should be your confirmation time frame. If for any reason you need refinement, then you can scale down to a much lower time frame. For refinement, you're not going to your refinement time frame to carry out any analysis. You're only going there to refine your entry. Okay, I hope that is clear, Mr. Francis. All right. So what time frame do you identify your chalk zone? All time frames. Like I said previously, you need to identify your higher time frame and your lower time frame. So if you're analyzing your higher time frame structure, you need to identify your chalk zone. If you're analyzing your lower time frame structure, you need to identify your chalk zone as well. Sorry, time will fail me. I would have been able to break that down and how you can carry out top-down analysis, integrating your lower time frame and higher time frame structure. It's a very deep insight that you need as a trader to be able to trade profitably. Okay, because if you're trading in the direction of the trend in your lower time frame, does it align with your higher time frame trend? How do you manage it? How do you trade in the direction of the higher time frame trend? You need to be sure that you're trading in the direction of the trend, because you cannot be trading in the direction of the current trend and you're trading against the higher time frame trend and you say you're trading in the direction of the trend. I know that may confuse you, but that's deep. Does break even? Okay. Does break even increase your profit? Depending on how you apply it. Okay. If the market still want to continue moving in your direction, it's going to increase your profit. When you break even correctly, you don't break even because you just want to break even. You break even at logical zones, logical levels. All right. How do you read market structure from higher time frame to lower time frame? I mean, I cannot be able to answer that question now. Okay, that's top-down analysis. All right, that's top-down analysis. So you can, to learn more, I dropped a link. Okay, maybe I will share it again. When trading the POI, we use premium and discounts. That's the same thing. You buy at, like I said, your POIs during in a bullish trend is below your inducement zone. So that's obviously around your discount. Okay. Are you going to update us on the AUD and USD JPY? Obviously, I will. Thank you very much for the class. All right. Mr. Stanley, I think I've been able to answer most of the questions. How do you know when to swing and when to
Okay,
scalp using
thank
items? All right, so let me just take this last one.
you.
Okay, how
Wow.
do you know when to swing?
Okay.
Yeah, sorry. How do you know when to swing and when to scalp? So when to swing is, as you can see, sorry, Mr. Stanley, let me just wrap it up. Okay, as you can see on the chart here, this is inducement, okay? And this is breakout structure. So if you want to swing, if you get an entry from here, that means you're going to hold this trade up to this zone, because in a bullish trend, price makes new highs. Higher highs, higher low, right? Price makes new high. So if you're buying from here, that means you're going to swing it all the way. But if you're not a swing trader, you can target recent highs, okay? And then if price gives you an entry again, you target the next high, in that progression. So I think that's all I can take for now. And I hope I've been able to answer your question. If you got value from this class, just type 7 in the chat box. I cannot be able to take all your questions. Okay. Thank you so much, everyone. And I hope you got value.
Thank you so much. In fact, I will type 77777. Wow, so this was a very insightful class. Thank you, Rity, for the class. Although we the time really worth it, although we have 30 minutes behind time, but it's really worth it. So thank you so much, guys, for coming out today for the class. It's really, really nice having you. And everything that she said, one thing about Forex trading is to practicalize everything that she said. So she has dropped a link to follow her on our social media platform. So I think this we should call it a day here so we can actually have our night rest. So thank you so much, Rity Trade. It's nice having you, and we love to see more of you in the future. And for everyone that came up this night, thank you so much, and God bless you. Yeah, see you when I see you again. Yeah, bye.